right, welcome everyone. Go ahead and put the chat up there while we wait. And we're just going to wait a few minutes to go live here on all the different platforms. For those of you just jumping on, feel free to drop a comment in there. Oh, all right. Good morning, Christina. Good morning, Jason. Hope everybody's having a productive week so far. And again, for those of you that just jumped on, we're just waiting a couple minutes here to make sure we go live on all the different platforms and give everybody a chance to jump on here. All right, a couple more people chiming in. Good morning, good morning. All right. Just one more second here and we'll get it started. But thank you everybody for tuning in on time. Appreciate it. We'll give everybody just a quick chance here to jump on. All right, I think we are good to go. We can go ahead and get it started here. Go ahead and take the chat down there real quick. All right. So, welcome everyone. My name is Kyle Hiersche. I am the COO of the Mortgage Calculator, joined here by our president, Nick Hiersche, and our sales manager, Jose Gonzalez. And what we do here every morning is go through the live rates of what the rates for the different programs are. And that way we can see how the market is doing, going up and down in real time. And we always do a deep dive into a different topic. And today that deep dive is going to be into profit and loss loans. Now, we are a lender that specializes in non-QM loans, and profit and loss loans are a great tool to have in your tool chest there so that we can use that to overcome some obstacles when we run into some of those during the process of a loan. So we'll have Jose talk more about that a little bit later. But in the meantime, Nick, let's go ahead and pull up the pricer and look at today's actual live pricing of the different interest rates.
All right, thank you, sir. So let me go ahead and switch my screens and we will check it out. So, as Kyle mentioned, this is our pricing tool for our mortgage professionals. We have over 300 loan officers in pretty much every state, and we can do loans in 22 states for primary and second homes, and we can do almost every state for our business purpose DSCR loans, which we love to do. If you'd like a full loan estimate with all of the details, please get with our team. We'd be happy to do that. This tool is going to give us an indication of the pricing and APRs today for our basic programs. And it is March 21st, just after 11 a.m. Eastern. So all of our basic programs have live rates. So let's check out what we have today. So for all of our scenarios today, we're going to pull up a basic, nice and easy scenario, 400,000 loan amount, 80% LTV, so 80% loan, 20% down payment. We're going to tell the computer to find the best rate at a price of one discount point. That's what 99 means. So our customers are typically requesting to buy down the rate a little bit. So we're going to find the best rate at about one discount point in cost. And we're going to compare our conforming conventional programs for a primary home with our FHA programs. And then we'll go into our non-QM expanded guideline programs where we have over 5,000 loan programs now. We just added a few hundred just this morning under our expanded guidelines with alternative income documentation. And that will be our deep dive topic for today as Jose goes into a very specific set of our alternative income programs. We also have VA and USDA. Remember, VA is only for eligible veterans, so we won't do that live here on the show. But if you are eligible, please get with us. We would be happy to quote that for you, and we do appreciate your service. And same thing with USDA, that is only for properties in an eligible rural area. So if you are searching in that area, please get with us. We'd be happy to quote it. But since not everybody is, we do not do that live. So for our first demo today, we'll check out our conforming conventional rates. We're going to keep everything as a purchase, 30-year fixed standard loan. We're going to have primary for these first examples, single family property, 1 unit, nice and easy. State of Florida, county of Miami-Dade, that's where our office is based. And for all of our demos today, we'll use a 760 estimated FICO score and a 40 estimated debt to income ratio in order to get our pricing. So let's check out our rates for today. And it is a live tool, so let me get through the security. And here we go. So fortunately, we've seen some rates go down from the last few weeks, but this is up a little bit from yesterday. So again, we love to do this show to see the rates go up and down every day. Yesterday, we were at 6.5 for 1 discount point. It looks like today we're at 6.625 for 1 discount point in cost and a final APR of 6.801. So the conventional rates have gone up just a little bit as the markets have stabilized. So again, if you're looking at a conventional loan, definitely recommend to lock that in this week, as we have seen kind of the bottom of what this recent atmosphere has brought. So definitely recommend checking those out. Now, if there's any reason that a customer doesn't qualify for conforming conventional, typically our next best option to compare, we'll pull up the same scenario, it's going to be our FHA program. So FHA does allow a little bit higher DTI, a little bit more flexibility on the credit guidelines. So FHA is usually the next best option. And we'll keep everything else the same for this scenario so we can compare our conforming conventional to our FHA programs. Now, this is awesome, as has been the case for the last few weeks here, because there has been a reduction in the mortgage insurance required for FHA. We see that the APR here, the actual full cost, apples to apples, comparing conventional to FHA is actually a little cheaper for this scenario. So the best option we found here was a 5.75 rate for 1 discount point in cost and a final APR of 6.352. So even taking into consideration the upfront FHA mortgage insurance and the yearly paid monthly mortgage insurance, we see that the APR is actually lower for FHA. So great news. Typically FHA has been higher in the past, but FHA is a great option now to compare side by side for our borrowers. So please don't discount FHA, especially with those recent updates to the mortgage insurance. Now, for our final example for a primary home, if a customer for some reason doesn't qualify for conventional or FHA, many other banks and lenders do not have other options. Fortunately, at the Mortgage Calculator, that's where we specialize. We have over 5,000 loan programs under expanded guidelines, aka non-QM. So we'll keep everything else the same, except now we have one new option that pops up, which is our income verification options. So we can do full doc, which is the same as conventional and FHA. That means 2 years tax returns, what everybody's used to. But that would kind of defeat the purpose of using these programs because we have so many other options. So we have our 1-year alt doc, 2-year alt doc. Jose is going to talk about that in a little bit, as far as our P&L being one of those programs. We have asset-related programs. We've done a couple shows on that. Business bank statements are very popular to use. For investment properties, our DSCR. We'll talk about that in a minute. And for our demo today, what we always go through is our most popular program for non-QM, which is our personal bank statement 12 months. And that's going to be for our self-employed borrowers. Many times our self-employed borrowers with 2 years of tax returns, often they have write-offs and various other things going on, which may cause them to not qualify at all or not qualify for as much home as they want to purchase. So in this case, we're going to use an alternative income method. We're going to grab 12 months of bank statements. We're going to analyze those and determine their actual debt to income ratio here using those 12 bank statements rather than tax returns. So typically our customers qualify for a lot more monthly income and therefore a much higher loan payment and a much higher loan amount. So this is a great option to show to our borrowers who may not otherwise qualify. So let's check out our options for bank statements this morning. And remember, these are non-QM, so these are always going to be a little bit higher rates, but very comparable. Notice the best option here, 7.375 rate for 1 discount point in cost has a final APR of 7.422. So comparing apples to apples, remember conventional was about 6.8 something on the APR. Right now we're at 7.422. Those are very close numbers when you consider that someone would not qualify conventional can now qualify for what they want using this program. And they're very close. A lot of times in the past, they've been farther apart. So we get very excited when we can compare side by side and our non-QM options are right there, almost the same cost as our conventional options. So please, if you're having any questions or maybe need to qualify for a little bit more, please get with our team. We can navigate you through the hundreds of programs you see here that we go through of all kinds of different flavors of these bank statement programs. So lots of different options. Some of these may allow things like foreclosures and credit events. So please get with our team. There's tons of different options here once we get into the non-QM space. Now for our final demos, before we pass it over to Jose, we always want to run pricing on our investment properties since we love to work with investors here. So for our last 2 demos, we'll do investment property. We'll set up the same scenario, 80% loan to value, 20% down payment, same loan amount we had before. And we're going to compare our conforming conventional investment property rates with our expanded guidelines non-QM investment property rates. Remember, investment properties are not eligible for FHA, VA, or USDA. So very simple, we'll compare these 2 options. Start with conforming, keep everything else the same as we had before. And let's check out our investment property rates this morning. Remember, our conventional programs have added additional costs to these investment properties. So although you see low rates in below 7s here, great option, 6.875, very high discount points. So 3.75 discount points. That's unfortunately the best combo because we cannot go higher in the rate on these conventional programs in order to reduce those discount points. So a lot of times we're kind of stuck here as far as our options. Great APR though, if our customers do qualify and they're able to take advantage, no problem, 7.143 APR. Great options for our borrowers, but many of our investors want to save discount points, right? Save cash out of pocket. 3.75 in this case is $15,000. That's a lot of money that an investor could deploy on another project or put towards purchasing another home. So many of our investors want other options. So unfortunately, as we scroll down here, there's some higher rate options, but not really lower discount points. Looks like the lowest combo here is a 7.5 rate for 2.75 discount points. You see that's still $11,000. Our investor borrowers usually want to compare another option. And that's where we love to present our non-QM options. So let's go into our final demo today. Pull up the same exact scenario here. But this time we'll choose expanded guidelines, aka non-QM. Choose investment property. And now we see we have a couple new options to fill. First, our income verification option for all non-QM. Our most popular option by far for investment properties is going to be our investor DSCR. It's not eligible for anything else, but for investment properties, this is the most popular income verification because it doesn't actually require income verification from the borrower. We're not going to use any employment documentation, any income verification from the borrower. We're simply going to use the estimated rental income from the rental property to determine if the rents from that property will cover the PITIA, the mortgage expenses, right? So as long as the rents will cover that, that's a ratio of over 1, and we have hundreds of programs under DSCR for ratios over 1. We also even have specialty programs for ratios lower than 1. So a property that doesn't quite cash flow, we can still offer a loan for those. Obviously a little bit more expensive, a little different programs, but just know that we have all kinds of different options under this umbrella of DSCR. Now, we do have to set our prepayment penalty here on a non-QM investment property. The standard prepayment penalty is 3 years. That's pretty standard for these programs. Of course, we can choose 0 or none. That would limit our loan programs and cost us more. So for our demo today, we're always going to choose 3 years, pretty standard. You can also choose 5 years if you want to save a little bit more money, but not as many loan programs have that 5-year option. So 3 years, always the best to get the most breadth of loan programs here under the DSCR. So let's check out our DSCR rates this morning. So looks like we got some great options here, about the same as it was yesterday. The non-QM stuff doesn't move as rapidly as the conventional stuff. So I think this is the same as yesterday, 8.125 rate for 0.975 discount points and cost for a final APR of 8.171. So remember, the APRs for the conventional programs were in the sevens. Now we're just in the low eights on the APR, so very comparable for a DSCR program to a conventional investment. That's why we love to present these options to our investors. And remember, this DSCR loan requires no employment, no income documentation, can close in an LLC or entity, all kinds of benefits for our borrowers, especially ones with multiple properties, because they can cash out multiple properties to buy other multiple properties at the same time and can have multiple loans going at once under these DSCR programs. So a lot of flexibility here. And you'll see there's all kinds of different options with different DSCR ratios, different prepayment penalty amounts, all kinds of different flavors of this program. So please get with our team. They can navigate you into which one of these may work best for short-term rental incomes and things like that, that may be a special version of this program. So we love these DSCR options. But now let me go ahead and switch my screen and we'll get into the topic for today. Give me 1 second here. And pull up our daily topic. All right. So thanks for joining us for the live rates. That was our live demo. Now we're going to go into our deep dive. So Jose Gonzalez, our sales manager, 27 years of experience here, has done a lot of non-QM. They've called it different things over the last 27 years. So a lot of experience with this. He's going to go into a deep dive under profit and loss loans. So in my demo today, that would be under the 1 year or 2 year alt doc options that we saw there, because this is just like one version, one flavor of the alternative documentation we can use. So this is kind of a subset of that one little option that you can select there, and it's a great option. So Jose is going to go through obviously some pricing details, but also when we would use this program versus some of the other options that we have. So if you're ready, Jose, go ahead and take it away.
Yes, sir. Good morning, everybody. Thank you for joining us for Daily Mortgage Rates Live with the Mortgage Calculator. Jose Gonzalez, sales manager here. Profit and loss loans are definitely one that brings a smile to me. Even though the DSCR is our flagship program, the profit and loss program a lot of times is the one that blows their minds, because essentially we can go to the tax preparer, ask them for an unaudited profit and loss report, combine that with a verification business narrative letter from either the tax preparer / accountant / CPA. Now, it really depends which option we have selected. That is going to determine if we need a tax preparer, an accountant, or a CPA. So just be aware of that, because a lot of times in our options, they may state CPA when they mean CPA, or they may state CPA when they mean any of the three above. So if you have any doubts on that, just please reach out to us and we'll be more than glad to explain it. So when would we use the profit and loss? Again, we could use either a 12-month report covering a 1 year period or a 2-year report, right? As I mentioned, they're unaudited compilation of income and expense. So again, when would we use it? Typically, the hierarchy that we follow when figuring out which income to use, we're going to first go with full documentation of the traditional sense, talking about tax returns, pay stubs, W-2s. And if after completing our thorough analysis of all the documentation, the DTIs do not add up to where we need them to be, then we can proceed to the next level, which would be bank statement for our self-employed borrowers only. I forgot to mention, this is a self-employed borrower option only, bank statements and P&L. So we would proceed to our bank statement option. And then should we have any difficulties in the bank statement, like, for example, declining deposit trends, large deposits throughout the year, maybe the borrower only had 5 or 6 very large deposits and they're having difficulty fully documenting that they were business related, or even worse, maybe they had a little oversight and they had a few NSFs, usually 3 or more in a 12-month period is a red flag that would need to be reviewed and confirmed, and possibly even an exception requested. So, if you have any of those difficulties, then the next level that we would progress to would be the profit and loss statement, which is another full documentation option for self employed borrowers. So, we have our traditional full doc, we have our bank statement, and then we have our profit and loss. So, those of you familiar with us know that we have a few good stories that have occurred with profit and loss loans where we've gotten our and brought it's like rising out of the ashes. The phoenix rises out of the ashes. We get the denied loan somewhere else, comes to the mortgage calculator, hands open, asking for help, and we give them the solution, and we go from a denial to an approval and closing of that very difficult loan in 21 days. And mind you, that was by one of our newer MLOs through a lot of cut a few file structure meetings to make sure that we were able to convert that denial where they tried to do the loan full doc somewhere else, not at the mortgage calculator. And then when we got it, we did our proper assessment and realized what were they trying to do here. They just totally, were barking up the wrong tree, let's say, right? Because we looked at it and it had profit and loss loan just screaming at us, right? So here in our first example, we have multiple options here. So we do have a 2-year option and a 1-year option. I'm going to show here in the first examples a couple of 2-year options just so you could compare the rates and see. Because remember, when we do use the 2-year option, we are extending the period that we're reviewing to 2 years. So, I mean, unless it's a real big benefit in pricing, or unless it's the only way that you could get it done, because maybe the underwriter conditioned you for an extra year because there's just something that they didn't like about the current year, then you may have to do 2 years. But nevertheless, here we have a 10% down purchase, right? 90% loan to value using unaudited profit and loss reports. Mind you, again, there's no mortgage insurance ever on non-QM loans above an 80.0% LTV. Never, ever. So again, these rates do take that into consideration. Here, our lowest cost option is 9.375. That's at a cost of 1.875 points. And our lowest rate that we can buy down is 8.99. And that was roughly 2.5 points. So still very good rates considering 10% down using 3 pieces of paper. A profit and loss is going to be usually 2 pages long. And the third party verification letter from the accountant or CPA or tax preparer, that's usually 1 page long. That's 3 documents to verify your income. So this is 2-year 10% down, right? So now let me show you the 1-year option, and we'll see if there's any differences. And you will see that the cost is exactly the same. so why would we set ourselves up to work double and possibly have face complications that would really be a disservice to our borrower if we force them to ask for another year's documentation without it being necessary. So here again, I wanted to show this illustrative purposes that 1 year is going to be the same. But now I'll show you one more example of that, 2-year versus 1 year. We're going to go with now a purchase of investment property. And these are 1 units for right now. This is 15% down, 85% LTV. So you're looking at almost the same rates, just obviously a higher cost, 9.375, costing you 1.875 points just about, and 8.875 costing you just under 3 points. So again, 15% down, 1 unit investment property. Remember, 15% down, 1 unit investment using P&L. You're talking here, conventional would just love to be able to do this. So now we're going to go to our, let me see, we have, no, 1 year P&L primary cash out, 85% LTV. I'm going to leave the 4-unit ones for last. So here we have pretty good options as well, right? 9.375 is the lowest cost option. 8.99 is the lowest rate option. Again, 15% or 85% LTV, cash out refinance of a primary using P&L. And now we have our 1 unit, 1 year P&L, 80% LTV cash out refinance. Now look at that. Look at how those rates improve when we are more in the, if you can call this, traditional realm of 80%, where there are more options available and obviously a little bit more competition amongst those options. Everybody wants to be chosen. So they put their best foot forward. So here we have really good options. I mean, this is investment property, 80% cash out, and it's a P&L. I mean, conventional can't touch this with a 10-foot pole. So you're looking at 8.875 at a cost of just over a half a point is amazing. You can buy that down all the way to 7.75% at a cost of just under 3 points. That's 2.75 points on that one. So now I'm saving the best for last. Now we're looking at a 4-unit purchase, because we always like to show the house hack, right? What is that 4-unit coming up at? Look at that. Wow. I get goosebumps. These are basically the same rates that they had for the cash out are the rates. It's a little bit more expensive at the lower end of the spectrum here, but you get 8.625 as the lowest cost option, and you can buy it down all the way to 7.375%. Wow. That is 1 to 4 unit. I mean, 4-unit, 1 year P&L purchase with 20% down. And last but not least, we have our 1 year P&L 4-unit investment property cash out refi at a 75% LTV. We even have a lender credit at 9.25%, lowest cost option, obviously, and you can buy it down all the way to 8.5%, and that's a very low buy down of roughly 1.5 points only. So some amazing options on a 4-unit using a profit and loss. I mean, some of you out there may not even know that this option existed before seeing it here this morning. Now you're seeing some amazing rates. If you're thinking about it for yourself, just give us a call. And if you're thinking about it for one of your borrowers, just give us a call as well. We'll help you put it together. So really looking forward to helping everybody out there put together their profit and loss loans. These are amazing mind blowers. Don't forget this option when pre-approving your self-employed borrowers.
Awesome. Thank you, Jose. So as Jose showed you, plenty of ways to go through this, not only a profit and loss loan and all those different ways that we can do that type of loan, but the thousands of other programs that we have. As Nick mentioned, our loan officers here at the Mortgage Calculator are consultants that can walk you through the entire process. We don't just do conventional FHA, VA, USDA, although we do those type of loans. our loan officers can consult you through the process of all of these different programs that we have. So if you want to be paired with one of our loan officers, go ahead and visit us at themortgagecalculator.com, or you can send us an email, info@themortgagecalculator.com. With that being said, we do this show every weekday at 11 a.m. Eastern time. So tune in and we go through the rates every day. You can see how they're fluctuating in real time, real rates. And then we do a deep dive every day, just like we did today with the profit and loss statement. So thank you, Jose. Thank you, Nick. Thank you, everyone, for tuning in. And we hope to see you all tomorrow at 11 a.m. Eastern. So take care, everyone.
Thank you, everybody.
Thanks, everybody.